The cash flow statement gives details about cash inflow and outflow for the company over a period of time. And I said earlier, the cash flow statement is really just a worksheet that we had to do to come up with a cash line item on the balance sheet. But it is very interesting. And as a business leader, you should be familiar with the cash flow statement at a high level. So cash came in and cash went out over the reporting period. But from where? Was it from the operations of the business, from selling stuff? Was it from buying or building some product? That would be in inventory. All of that would be in the first section, cash flow from operations. Or did we invest in some new assets, maybe a new plant or some equipment? That would be in the second section, cash flow from investing. Or did we borrow money? Did we pay off debt, issue a dividend, things like that? That would be cash flow from financing. And to come back to the first section, cash flow from operations, it seems a little strange at first glance because it starts with net income from the income statement. But the idea is that you've already done most of the work if you start with net income. And then you just reconcile in or out the non-cash items, like depreciation, which is an expense on the income statement, but it isn't actually cash out. The cash out was when you bought the item, the thing that you're depreciating, the plant, for example. So you need to add that amount back in so that the report can focus on just the cash flows. And it's the same with accounts receivable. It was counted as revenue on the income statement, as we again had talked about earlier. And it flowed through to net income, which is where we're starting in this section of the cash flow statement. But you haven't actually yet received the cash from the customer. It takes a little effort to get into the cash flow statement, but it's worth the effort. And the three financial statements are tied together. Starting with the income statement, net income goes to one of two places. It either leaves the company and goes out as dividends to shareholders, or it stays in the company as retained earnings on the balance sheet. And net income is also used as the starting point in the calculations in the cash flow statement. Ending cash from the cash flow statement is shown on the balance sheet. And the balance sheet ties it all together through retained earnings and cash and shows stakeholders what the overall financial position of the company is. So the statements, again, are really giving you a multifaceted view of the company from different angles. Well, that's a quick overview of the key financial statements used at aerospace and defense companies. We talked about how finance is actually a story being told about the company. And we went through the income statement, the balance sheet, and the cash flow statement. And if you'd like to take the next step and bring these numbers alive, contact Prism to find out more about our BizFighter business simulation. So feel free to contact us through the email address here. Thanks for watching.